that the pessimism on Eternal is overdone. Why is that? Because after the big decline that we've seen, current share price implies just either of the two things. One, the food delivery valuations are near zero, or secondly, Blinkit EBITDA is structurally halved. And they see both of them as non-zero probabilities and much unlikelier scenarios. So on the back of that, the risk reward is skewed towards the upside. They have a target price of 310, which implies a near 50% upside from here itself. But despite the decline and the positive skew, the only headwind for Zomato from here on is the possibility of MSCI exclusion, because if the FDI cap comes through, the stock would be excluded from the MSCI index, and that would lead to a $1 billion outflow. So that's something that we'll most definitely have to keep an eye out on for Zomato.
Absolutely. So we'll keep an eye on this one as markets open. What do we have? In terms of a start, so the Nifty Bank is ticking higher, about 0.5% up on the Nifty Bank, 51,700 or so, I think. The Nifty is down about 1/3%. That's about 80 points lower. Nifty Bank is up 0.12, but it's in the green. I mean, yesterday as well, the Bank Nifty was the one which first turned around, because the Nifty started to recover later. We have 100 points now on the Nifty, so it's a very sort of normal kind of a open. You would look at this screen, if you did not look at what happened last night on Wall Street, you wouldn't guess that 5-6% kind of cuts on Wall Street, but that's what you have. IT, I just want to take a quick look at it, because the top 5-6 losers were all IT yesterday, and I can spot a few. That's a heat map. I can spot Infeed, HCL Tech, Wipro, TCS, etc. amongst losers right now. But otherwise, I mean, very few gainers, and bulk of it, of course, on the red side to begin the session. 130 lower on the Nifty. Surabhi.
Okay, let's talk about the key losers then. ONGC sliding with the 6% drop in oil prices. ONGC straight away lower, biggest loser on the Nifty right now. Hindalco is 2.5% down. Tech is still falling. Infosys, HCL Tech, TCS, all of these stocks are down between 1% to as much as 2.5%. What else? Tata Motors, again, global-facing business, 2.5% lower here as well. Maruti is lower. Bajaj Auto is lower. Eicher Motors is lower. So most of auto actually is down this morning. Beyond that, you've got Reliance, NTPC, Coal India. These are all the stocks which are down a little over 1%. Let's see what's bringing up the upside. The stocks that we were just discussing with our BFSI expert. HDFC Bank about 1.5% up. Bajaj Finance is barely there, just at the flat line. Really can't even call it a gain. And HDFC Life is also close to the flat line. Otherwise, everything else is either flat or very clearly down. ICICI Bank, most of your other banking names, not really able to support the market much. Let's look at State Bank of India, also lower. So IT and most financials keeping things under check this morning.
Keeping things under check, and the sell-off is accelerating as we speak. We opened closer to the flat line. Now we're down 120 points immediately on the Nifty. And the bigger weakness is the mid-cap end of things. We outperformed the mid-cap end yesterday, but right now the mid-cap index is down about 0.8% straight off the bat. It's the mid-cap IT names which are taking a big knock. But alongside that, we have Bharat Forge, which is lower as well. So, industries exposed to exports or overseas sales, etc. Angel One, weak client addition and lower market share is something that, the street does not like. That stock down 3%. Avenue Supermarts, again, no fireworks in the numbers, 3% SSSG. Despite the store addition, maybe the street is not very happy with the 16.6% revenue growth. They would have expected a little more. That stock lower by about 3% as well. On the way up, though, you did speak about, how the upstream oil companies were lower. But look at the oil marketing companies, HPCL, BPCL, IOC, all of them doing extremely well. Interglobe Aviation as well, uses oil as a key input, doing a lot better. For the second day running, all these textile names are surging. So we have, names like Siaram Silk Milks, Kitex Garments, all of them higher by 3 to 5%. On the way down, though, we do have Mazagon Dock, which stands out with a 6% cut on account of increased supply to OFS that has been announced. All in all, relatively worst day for the mid-cap end of things, and the Nifty now down almost 150 points. The Bank Nifty is the one which is really outperforming, and the biggest contributor to that is HDFC Bank, which is up around 1.5%.
Absolutely. So that's essentially the overall lay of land as far as specific stocks are concerned. So 0.6 lower on the Nifty. Nifty Bank is in the green, as Mangalam said, and of course, broader markets. It's too early to look at overall NSE advanced decline ratio because things are still opening up, but we'll give it some time. But maybe just put up the Nifty IT index, 4% yesterday. And by the way, earnings start next week. We'll talk, of course, about Jan to March and what the quarter looked like. But more than that, I think a bulk of the conversation will be around tariffs and what the implications, etc. Are they seeing anything? Are they hearing anything from their clients in the US? 2%, so 6% in 2 days. Well, that's a sharp hit, which is coming through in that space. So
just was pointing out, Masgao Dock down 6.5% because of the OFS. The stock immediately adjusted to the OFS price, which is 2,525 rupees. So there was that much of a discount, and that immediate adjustment has happened as we speak. And Mangalam Avenue Supermart still down about 4% I guess, despite the top line. What was looking like a decent top-line growth.
Yeah, but I guess the street wanted a little more. It's no other, explanation for that apart from the fact that the street wanted a little more. You add more stores, you get eke out a positive same-store sales growth, 16.6%. That also speaks about some sort of weakness that we're seeing in urban slowdown, which still continues because this is the best barometer to track urban middle-class consumption. And if that's not growing, then maybe it's bad news for a lot of the other FMCG companies as well, which are hoping for some recovery to come by.
Dabur, how can we forget? So not sure about where that recovery is. But IT and FMCG, both big sectors, and both have their own overhangs.
Yeah, absolutely. Let's welcome in Shreyas Devalkar, Head of Equity at Axis Mutual Fund. Is with us. Shreyas, good morning. Good to have you with us here. Thanks for your time. So what is the Saransh, if I can ask you that, in terms of how's the view developing between you, your team, fund managers, analysts, in terms of stocks you own? What kind of impact do you see because of these tariffs, etc., which have been announced? And it's not just day one, right? I mean, you'll have to sort of track this as you go along. But headline view first, Shreyas.
Well, thanks for inviting. If you look at, actually, as it is always said, that uncertainty is always the certainty, and more so in this market nowadays. In this tariff and associated impact on the companies, generally exports-oriented sector, one need to be really careful. That's what we are also looking at, because there may be some retaliation from multiple countries, there will be legal challenges, and there will be even this tariff may get reduced. Probabilities there, obviously, in this. So any action which we take now based on what is the outlook, and forget about us taking any actions based on the stock's price movement, etc. The companies as such themselves won't take actions, right? Whether it is any decision to try to shift plants or set up a plant, and this indecision, which is probably will hurt in near term. It can be indecision simply from a US company not to import today because today tariff is higher, while you don't know 15 days down the line the tariff will be lower, and those chances are there. So there's a lot of uncertainty which will have impact in numbers for company as such. That's where the bigger discussion is on where the uncertainty is low and where one can invest in from a longer term point of view. In that context, generally in over last 5 to 6 months, actually, we have increased our exposure to financial services sector, and that primarily because of the reason that it would be immune to such volatility. At the same time, we would have reduced to any export-oriented companies, may it be auto ancillary or IT sector. Today, and one more angle in this market today is about valuation, and that is very interesting. Generally, market is anchored today still, I don't know, but still I believe that market is anchored to the valuations in last 3 to 4 years. While one need to really check and recheck why and wherever the valuations are higher than pre-COVID level, one need to really justify why they are higher and whether they should be there or not. I'm not saying they should not be. Point is, one need to really think about it and check what it is and where it is, considering again the uncertainty overall in the economy and global economy as such. So these are the few thoughts which we have today now.
By the way, look at the Nifty chart and the stocks. Now it's a bit of a waterfall decline. It opened okay, and then it's just... Look at the Nifty now. Look at that graph. It's a straight line down, and everything is suddenly selling off, including pharma stocks. ONGC instantly opened 3% lower, now 6% lower. Look at a Hindalco, opened about 2% lower, now 4% lower. And even pharma is not getting spared. Look at Sun Pharma, Cipla, a lot of these names under a fair amount of pressure. Reliance itself is suddenly down 2%. So it's a complete knock. 220, and it's accelerating. Now it's gathering momentum on the downside. So let's watch. Difficult morning.
You know, just on that point, and I think Shreyas was saying maybe 15 days later, tariffs could be lower.
Kind of pull back a little bit.
But, you know, I think if you hear, and we played out that soundbite, we tossed to it, the Trump soundbite, right?
Yeah.
Right.
He seemed unperturbed. He actually, if you just see what he actually said, after a 6% decline, he said, well, readjustment was needed. You know, so
the operation had to be done.
Operation. It's a patient. Operation is now over, and now there is recovery, etc. So almost as if they're prepared for it.
Yeah.
And if you remember in the speech to the joint session of Congress, Trump had at that point said, there was this one line. He said, there'll be short-term pain. So actually, and of course, I mean, his Treasury Secretary is a 30-year market veteran.
Yeah.
So it's very unlikely they didn't see that markets will...
And they haven't thought this through.
Yeah.
Seems they have.
So, which then means that there is no quick, going back. The bar is high, negotiation, etc. can happen. Not that it can't, but the bar is high. It's going to be tough, and they sort of dug their heels in.
So the only way to basically get to the other side is go through it and stick with the pain. I mean, the decline on the Nifty itself accelerated a little more as we broke yesterday's low. Yesterday's low was 23,145. The next 100 points came immediately. Now the 23,000 mark is psychologically extremely important. So we'll keep an eye out on that. We have a couple of technical levels as well. You know, the 20-day and the 50-day moving average very close. You know
why? Okay, I just looked at the Asian screens. The reason why we've got this waterfall decline on the Nifty now is suddenly Asia is completely cracking. In the last, I think, half an hour, Japan has fallen 1%. It's a large market, the Japanese market. And Nikkei was about 2.5% lower at 8 o'clock in the morning. Now it's 3.5% lower. So this is big stuff. It's painful stuff. And folks, even if one has to just walk through this is not about, immediate readjustments. You don't readjust global trade lines in a matter of 2 weeks or 1 day. The supply chain realignments, it's very big stuff. And the markets, it's a new beast that the market really has to perhaps deal with post-COVID. Shreyas, hi, great to have you on the show. So in the interim, I mean, we can go to economics and we can say India doesn't get impacted that badly. But markets move on sentiment as well, right? Sentiment plays a huge part, and that's working against us right now. What should the strategy be for investors to ride this period out? Whether it lasts a week, a month, 3 months, we don't know.
True. And in that context, as I said, this uncertainty is mostly currently emanating from the global. And in this uncertainty where this tariff and the end game is not yet seen. Actually, everyone is evaluating currently the first derivative. The second and third derivative is more important, where how it affects the demand globally, and accordingly how it affects Indian companies. So as far as investors are concerned and investments are concerned, the way we are looking at it is be cautious on the exports-oriented sector. Valuations keeping aside, and as far as domestic-oriented sectors, as a long-only investor, one should look at more towards the domestic-oriented sectors, which may be in financial services, in consumption space, as well as in the investment space.
Okay.
All right. Now, just a quick word on the IT services. I mean, it's well understood, right? US is the problem. So in India, IT is exposed 70%, 75% of the business still comes from there. So it kind of throws everything in a flux. But how are valuations here? And any views, strong views here, Shreyas? On any names or any segment here? Go on.
Definitely, yeah. So this is a very interesting sector, and this I always use as a case study for this uncertainty. If you look at the first decade of this century, this sector used to grow at closer to 15%. The second decade, it used to grow at closer to 10%, and today it is closer to 5%. And if you see, valuations are broadly there in this period. one can argue that yes, the payout companies actually stopped acquiring the way earlier they used to be acquisitive, and that's why the free cash flow generation was poor. Today, the free cash flow generation to PAT is right from 80 to 100% in the large cap and somewhere to 60 to 100% in mid and small cap. And then the payout ratios are also higher. So that warrants somewhat the re-rating, adjusting for a slowdown in the growth. But the fact of matter is the growth is lower than earlier with increased payout ratios. So this valuation, though, may look like that yes, they have not got derated to the extent of the slowdown in the sector, but partly it is getting supported by the higher payout in the sector. So in my judgment, whenever historically we have seen that whenever there is an uncertainty, wherever there has been any potential lack of decision making by their US-based client or Euro-based client, this sector, irrespective of its valuation, has faced challenges in terms of its valuation. And in the context of this decade, the way the growth has been, one need to look at it holistically and then tread it through it cautiously, rather than going by the headline valuations per se.
You know, everyone's talking about relative places for safety and domestic-facing names in the light of global uncertainty. Maybe banks are one of them. Then you have the consumer space, you have the cement space, you have local infra space and defense space, etc. But one is just trying to understand whether there will be any absolute gains out here or not. Because earlier we had Digant say that, you know, maybe because of the public sector banks outperforming, private sector banks' growth will be in check. We've seen updates coming in from the consumer space. They aren't, very satisfying. At the same time, things where there is some sort of growth, the multiples are out of whack. So what does one really do?
Yeah, that's where it is interesting point which you raised on the absolute gain, and that's where someone who is investing in the market, one should look at a relatively longer term view of 2 to 3 years at least, rather than hoping that there will be immediate gains in this, unless again all these tariff related things get changed. And as you are also highlighting, it's not likely that soon something would happen on this, and that's also opinion of multiple experts that the changes are not expected to be sooner. Even in India's case, the bilateral trade agreement is now expected over 2 to 6 months. So that is again, so whenever these countries will go through these bilateral trade agreements, you will see that more clarity will emerge in this uncertainty.
Okay, all right, Shreyas, we'll leave it on that note. Thank you very much for joining in and offering us some perspective on what's turning out to be another slightly difficult morning. The mid-cap index is also down 1.5%. It's tough to show bravado in the face of a 5-6% kind of an overnight US market decline. What's interesting is, I'm just being a little nostalgic here, I mean, in earlier periods of uncertainty or crisis, COVID, even several market routes before that, on days like these, you would always see pharma and FMCG rally. But we're in such a different market. Pharma is not rallying for its own reasons. And FMCG, Mangalam's FMCG sector, it's got a challenge of its own, right? Typically, those were your safety spots, your places to hide. But FMCG no longer is able to play that role for reasons we all know. Yeah,
but despite that, for what it's worth, if I may, Tata Consumer is still among the top Nifty gainers right now. Britannia is mildly in the green. And we have HUL, which is recovering from the lows, as is Nestle. But there is no growth out here. So you just keep an eye out on how that pans out. But from extreme defensive domestic, let's go across to the one which is on the offensive right now, the way down, the IT sector. You know, IT Lima is everything that FMCG isn't, apart from the fact that the only thing that is common is the underperformance that we're seeing for both of them.
Indeed. So let me just quickly run you through what brokerages are saying now. First, Bernstein says the impact on Indian IT over the near term will be uncertainty in terms of tech budgets and spending. So their expectation is tech budgets will get pushed out further, and that will drive lower growth. The worst case scenario is that a global financial crisis, way back in 2008 kind of a scenario, when the global world, slipped into a deep recession. And at that time, Indian companies had reported a 10% quarter-on-quarter revenue growth. TCS was down 6%, in terms of a revenue growth sequentially in Q4 of calendar year 2028. Accenture was down 13% in terms of a top-line growth. Now, Bernstein is saying that that's not the scenario that they're anticipating, a GFC kind of a scenario, but they do anticipate that growth rates will get impacted. So they prefer quality. Their bet lies with Infosys in the large cap space and high-growth mid-cap companies like Coforge and Persistent. They're underweight auto ER&D companies like LTTS and Tata Elxsi. Now, JP Morgan is saying that when can the stocks potentially bottom out? The bear case scenario for them is that there is no growth for large cap IT names like Infosys, TCS, HCL Tech in FY26 and no margin expansion. If that is the case, then we're staring at deep EPS cuts for FY27. And if you apply the bottom PE multiple, then you're still looking at downsides of 7% for TCS, 6% for Infosys, and 14% for HCL Tech. For mid-caps like Coforge and Persistent, etc., and some of the others, we can potentially, in a bear case scenario, right, that is no growth in FY26, we could see EPS cuts of 10 to 15%, and then there could be downsides of 13% for Coforge and 25% for Persistent. So their recommendation is stay light on IT, don't buy into any stocks in the earnings season. A conservative guidance commentary from IT companies could drive stock prices lower, and that perhaps could throw up an opportunity. So they like Infosys and some of the growth mid-caps. Macquarie, on the other hand, believes that the current market reaction is overdone, and if you have a long-term time horizon, then this is an opportunity to load up on the stocks. Back to you.
Yeah, but you'll have to have nerves of steel and a stomach to, to withstand that whole volatility, digest that volatility, if you want to be that braveheart buying IT on days like these. Thank you very much, Rima, for bringing us the street view. Sector definitely under pressure. Let's move on to our next corporate conversation then. Bajaj Auto is the company that we have on our radar now. The stock, like the rest of the market, has been under a little bit of pressure, down about 2% this morning. The monthly sales numbers came out and they were more or less in line. March sales data coming in, domestic sales were quite flat. Exports saw a small 2% growth. We have with us Mr. Rakesh Sharma, Executive Director of the company. Mr. Sharma, always a pleasure to have you with us on our morning show. Thank you for joining in. I'll talk about the domestic sales in a bit, but I mean, as an industry veteran, let me ask you the bigger question. I mean, this whole tariff storm that's blowing out. I remember when we spoke about this earlier, of course, you're not that impacted. Your big export markets are Nigeria, Africa, Latin America. But as you watch this from the sidelines, are there any second or third order, perhaps, impacts that you would be wary of?
Good morning, Surabhi. Yes, indeed, the world order equilibrium has been disturbed, and a lot of us who took globalization as an irreversible phenomena are now seeing the winding down of that. While we are not impacted directly, but these kind of uncertainties lead to the weaker currencies moving, getting devalued, leading to retail inflation, and could sort of dampen demand. There are countries like Mexico. Mexico is one of our largest overseas markets, both by volume and value terms. And how the economy of Mexico is impacted, we have to see once all these tariff, the dust around the tariff wars sort of settles down. So there is no direct impact, but yes, like you said, there are secondary impacts to be watched out for.
So what is your exposure to Mexico in terms of your total export pie? What does Mexico contribute?
I wouldn't call it exposure. It is a substantial, like I said, it's one of our top 3 markets. I would say we do about 10,000 units per month of very high-end products. So we have to see, till now, there is no major impact in terms of demand, and growth rates are sort of almost similar. But going forward, we just have to be watchful as to how the economy of Mexico gets impacted.
So just to complete this point on global trade negotiations and pressure, now, whenever Mr. Trump speaks, he loves to talk about motorcycles, right? We've all seen that. And India has had to respond by lowering some duties so that those Harleys can ride into India. Could that, going forward, if we are willing to give more, could that become a challenge for your super premium bikes? I mean, KTM, the super premium brands that you're selling here in India and overseas as well?
Not at all. See, we are already competing with US brands and Chinese brands and Japanese brands in over 108 countries, right? So if we are competitive overseas, we will be competitive in India. So quite frankly, this is not a great issue for us because even if we lower duties or bring them in line with the US, we would in fact require reciprocity. And in any case, our exports from India to, that is Bajaj Auto's exports from India to the US are very small. And, only the KTM and the Triumph joint products, which we have co-developed and are manufactured in India, they go over there. They constitute about 1 to 2% of our entire exports. So even from that point of view, it's a very minimal impact. But from the point of view of lowering import duties in India, I think we will be competitive.
Mr. Sharma, we'd ask you to just hold on for 20 seconds before we come back and speak about the domestic markets as well. Because it's that kind of market where you look at Twitter before ticker. Donald Trump has now put out on
Where
pharma,
is this, Mangalam?
We're just trying to figure out, is it on social media, is it on Truth Social, is it on a statement, etc. But what we know is that pharma tariffs will be coming soon. And he said, and I quote what is being flashed, pharma tariffs will be at a level you haven't seen before. And to add to that, he said that they will be viewed as a separate category. Now, yesterday, the only sector that outperformed was the pharmaceutical sector, expecting some sort of relief because, for the sector on the whole, along with a few other, they were excluded from these tariffs that were announced. He said it will come in the near future, not too far. And now the fear of that comes back once again. I wonder what the hedge fund guys would be doing, yesterday with the outperformance that we saw, with now the underperformance that we're seeing. A couple of these stocks which have high exposure to the US markets, Aurobindo Pharma, etc. in particular, Zydus Life is the other one, all of them at the low point of trade. And that's the one which is now causing some fear.
Mangalam, that's what I was saying yesterday, right? I mean, that tariffs exempted for now. For now. But that was because, he's talked about pharma so many times to suddenly think that he'll now not do it, especially after what he did on tariffs, which was much more severe. So, I mean, generally the sense was that it'll come. And the executive order specifically said this is national security. He said, well, why does he want pharma tariffs? Because he wants pharma, he wants these things to be made onshore in the US.
In America.
So I think that perhaps is the reason why you have this now coming through. It's a soundbite. It's an interview, I was saying. It's an interview to Sky News, we are being told, which has happened now. And or maybe later it's being aired, and we'll play that specific soundbite out for you in a specific, in shortly. But these are, I mean, ignore the rhetoric at a level you haven't seen before, but maybe not, right? Because he's done what he said he will. But the tariffs are going to come. What we'll do also, of course, is revisit this space with Vinny because she had some exposure details, etc. That table, very helpful company-wise exposure to the US market. So that coming up in just a bit.
I think in line of that, the only thing that the market's taken cue from here is that the two things that Donald Trump can't impose any tariffs on are the Indian banks and the Indian consumer stocks or the Indian telecom space as well.
True.
Because that's where you have a bunch of flows coming in immediately. Up until yesterday, we were like, okay, maybe there is some relief with pharma. It's not included immediately, maybe sometime later for now. But as soon as that new conversation with Mr. Sharma of Bajaj Auto, Mr. Sharma, with all that is happening around the world, that is easier to talk about and discuss economics. But from a business standpoint, both globally, growth has been lacking at a lower base but a higher rate. But domestically, you had guided for a 6 to 8% sort of growth, and you've ended up doing just 2%. So when we stand at the start of FY26, what is your target for the next year when it comes to domestic volume growth and export volume growth for the next year?
Yeah, well, I would say that the outlook for the industry, which we are presuming, is about similar as what we had said last year, about 6%. But the important thing to understand is that the nature of growth is not completely linear and completely secular. You will have quarters which will be very, very high growth, and you will have quarters which will be very, very low growth. And as we move forward, you see these differences between growth rates and the actual performance, between outlook and actual performance, there is a constant dynamic over there to manage, which is between growth and profitability. Because growth is just one dimension of the market. The other dimension of the market is competitive nature, the inflation. And as you know, at Bajaj Auto, we are constantly trying to optimize both the top line performance and the bottom line performance with market share and competitive position. So a lot of these variances which you see is trying to get what we feel from our corporate standpoint is the best competitive position, which is a competitive position comprising of not just a volumetric position, but a value position and a certain profitability profile. And we will continue to do that. And we think that through its ups and downs, next year the motorcycle industry should be looking at a 5 to 6% growth.
And what about you?
Well, we would like to outpace that, and particularly, we would be planning to, grow beyond what the industry is going to presumably grow at.
All right, Mr. Sharma, thank you very much, sir. Pleasure speaking with you, and we'll sort of continue this discussion, fast-moving environment, more so on a global level. So that discussion on autos, etc., will continue. We'll take a quick commercial break here. We've got a discussion on apparels coming up. We've got a discussion on the EMS space coming up as well. You'll hear from Gokuldas Exports and PG Electroplast coming up. Welcome back. We have the management of Gokuldas Exports joining us. Seva Ramakrishnan Ganapati is Vice Chairman and Managing Director at Gokuldas Exports joining us. Mr. Ganapati, good morning. Prashant here. Yesterday your stock was up 7-8%. I mean, leave the stock aside, but that's just an indication. Market assumption is tariffs here are going up. They're going much higher in places like Vietnam, Cambodia, where a lot of the China manufacturing moved after the first round of tariffs. So maybe there was some shift to India. Is that really the case?
So it's early days, so we need to see how all of this pans out. Relatively speaking, we are better off compared to other competing countries. Take China, Vietnam, Bangladesh, Indonesia, all of these countries, so we're better off. However, apparel already attracts tariff from 15 to 30%. Now, the new reciprocal tariff, which ranges from 26% for India to 54% for China, are all in addition. Such a high tariff could impact consumer demand as increased costs eventually will be pushed onto the customers. So of course this will happen with a phase lag. We will have to see how all of this out and how does this impact volumes going forward. So that's something which we will have to wait and see as to the impact of some of the tariff on some of these areas.
What is the tariff US charges right now so far on Indian apparel imports?
So on all apparel imports, US charges anywhere between 15 to 30%, 32%, currently, depending on the product type.
15 to 32%. And what is, for your products, what is it on an average?
So on an average, it would be about 17% or thereabouts in that ballpark.
17.
Yeah, that's right.
And what percentage of what you produce goes to the US?
Goes to the US? It's about 70%.
So 70% of what your revenues are tariffed at 17% right now.
That's correct. That's correct.
And they will be now, from the 9th of April, the 17 plus 26.
That is correct.
I mean,
That
not
is correct.
26. It'll differ based on... No, it'll be 26, right?
That is correct. The 26 is a flat,
flat rate.
increment. And then depending on the product, the base tariff will change.
Now, what are the tariffs? What are the cumulative tariffs on Vietnam, Cambodia, China? After this, you must have looked at it. Yeah, the new ones. Yes.
Against our 26, for China it is 54%. I think it is some 45 or odd percent, 46%. Bangladesh it is some 13%. So 37% against our 26%. So yeah, Bangladesh will be +9. Vietnam, there you have, So all of these are...
No, Mr. Ganpati, our tariffs, you say, for example, if you take Gokuldas as a proxy for the industry, will be 43%, right? Total 43% tariff.
That is correct.
17 plus 26.
As in the base tariff plus 26, right?
Correct. What is that same number? Existing tariff, because those countries would also charge some tariff, right? On apparel exports to the US.
No. Their base tariff...
Yeah.
So their base tariff remains the same, anywhere from 15 to 32%, depending on what product you export. So China, since they export more synthetic garments, their base tariff will be even higher because synthetics attract anywhere between 25 to 30%. So let's say their average is something like 20%. So on 20%, there's another 54%, so that goes up to about 74%. For China.
We're all... Okay, so the delta between our 43 and where they are is how much, roughly, between these three? These are the three important ones. Bangladesh, Vietnam, and...
Yeah. So when you look at the delta, everything depends on the product type. So remove the base tariff. If you look at our 26, Bangladesh is 37. The delta is 9%. Look at our 26. Take China at 54. 26 to 54. That is the delta that we are talking about. That's about 28%. And with Vietnam, it will be about 20% or thereabouts, 19%.
Okay.
That's the tariff delta.
20% tariff delta. I mean, we are cheaper by... just tariff-wise, we're cheaper by 20%. The other...
Approximately,
The cost of output, is it... Can that kind of take care of this difference or no? I mean, in terms of competitiveness,
no, this is huge.
Pure competitiveness.
This is huge. A 20% delta and so on and so forth are very large. It's very difficult to manage it through cost management and all of that. So cost of raw materials, etc., will not offset all of this. This tariff delta is advantage India. But then I think what we really need to keep in mind is that what is the impact of all of this on end user demand? Because all of this looks great on paper. We have to see how does this impact consumer demand in the United States, which is a very large market. And if this tariff actually will get passed on to the customers, will they buy in the volumes that they will they have been used to buying, right? So that is something we need to see. So and if that volume drops, of course, India will still tend to keep a good share of the volume. So there is a benefit for us. But any drop in volumes does impact the industry as a whole, right?
And we don't know, just purely with regards to tariffs, we don't know how these countries will give in, cut tariffs and try to negotiate deals, etc., right? That tariff differential may change. We don't know, depending on what everybody does. I just want to make a quick mention, Mr. Ganpati, just coming to you. There's a flash at the bottom of the screen. There was this confusion, then it was confirmed, because the board which President Tariff had, when he announced the tariffs, mentioned Indian tariffs at 26%, but then the website said 27%. So the understanding by the end of the day yesterday was that the actual tariff which US will charge on Indian imports is 27. Now what we're saying is that the Annex 1 on the White House website mentions 26% tariff. So basically...
The president can't be wrong. It's as simple as that. Yeah. So it is, he was holding a placard which said 26. Yeah. The next year on the website said 27. By the end of it, the placard is right.
Correct.
So it's 26.
So, it is 26, not 27. Just
that doesn't make much of a...
Yeah, it doesn't make much. It's a technical thing, but yeah, I mean, it is what it is. Mr. Ganpati, two questions. One, have you heard, it's very, very early, but have you heard, because the underlying consumer demand in the US, just look at the stock market yesterday, right? Have you heard from big clients, and you supply to most of them? You know, a Gap and Victoria's Secret, and I don't know what. There are so many other big brands. Have you heard anything from them from after what we've seen in terms of tariffs?
See, everybody is trying to assess what the impact will be, because you know, every brand has worked out certain scenarios of tariff, and this tariff has been way out of the range of the scenarios that they had worked out. So nobody has absolute clarity on which way the consumer demand will go. So you know, it will take a few days for them to react. But the tariff quantum being so high, you know, they will have to really strategize as to how do they deal with it. These quantums cannot be pushed back to the suppliers, because no supplier can bear this kind, nor can the retailer bear this. So eventually it will have to be passed on to the customers.
But have order cancellations started? There is some feedback from the Indian Apparel Association that they're asking for, importers are asking for discounts.
No, not yet. Not yet. No, it's too
That's
early.
not happened. So, you've not seen that?
No. We have not seen that.
Sorry, you were saying, you were adding something.
What I was saying is that, look, at the moment, summer products are already in the warehouses in the United States or are in transit. Now, those will enter at the previous tariff, tariff rates. So the consumer impact will start from fall/winter, which is still quite some way off. So, you know, we are talking of something like September onwards, because, you know, the tariff will impact the incremental goods, which are now going from April onwards. So the impact of tariff will come with a phase lag. In the meanwhile, my sense is that many countries will continue negotiations with the US government, and, you know, we may see a change to all the tariff tables that we are looking at.
No, absolutely, Mr. Ganpati. Every day is a new day. Every day these numbers are changing. But as of now, if you work with 26%, how much of it will have to be passed on to the US customer? And therefore, what is your realistic assessment right now in terms of a drop in demand?
So very hard to say, very, very hard to say. So, you know, consumer demand is price elastic, right? And will all of the 26 be passed on to the customer? I think a large chunk of it will have to be, because rest of the value chain cannot absorb this. And keep in mind, India, you know, only India is slapped with 26, right? Other countries are even higher. So their imports from Vietnam and China are far, far higher than that of India. So you know, on an average, the impact on US imports will be closer to 30%, 32%, or even 35%. So we got to see whether, you know, such high tariffs can be passed, you know, can be absorbed by the value chain. Unlikely. So it will get passed on to the customer. Now, whether the customers will react by buying less, what other ameliorating measures are there in the US, which, you know, allows consumers to come and buy more? All of that will have to be seen in conjunction. And we have time. We have time for about 3-4 months before all of this kicks in, because, you know, we're talking of goods which will attract tariff and be consumed by customers down the line, not right away.
We take that point entirely, and obviously when, you know, things start to look like they're settling, we'll also have the question of whether India can benefit from this by virtue of its own capacity, by its own capabilities, etc. or not. Players like you will obviously outperform, but maybe a large amount of fringe players may not get the similar benefit as one is expecting. But I guess that's a conversation that we'll have at a lot later time. Thank you so much for joining in and you know, giving us your perspective on this one. But meanwhile, while we were having that conversation, we had the commentary coming in from Donald Trump on pharmaceutical space. Now we have the video bite as well. Donald Trump saying that pharma tariffs will be starting to come in soon. Let's hear it out from Donald Trump himself.
The pharma is going to be starting to come in, I think, at a level that you haven't really seen before. We are looking at pharma right now, pharmaceuticals as a separate category, and we'll be announcing that sometime in the near future, not too distant future.
All right, so that is Donald Trump saying it as is on the pharmaceutical space, and that's the one that actually spooked the entire pharma stocks as well. And now as we speak, a lot of them are at the lower end of today's trading range. Divi's Labs and Cipla, for instance, down about 5%, and a big gash is what we're seeing on Sun Pharma and Dr. Reddy's as well. So,
by the way, that's yesterday to today, and this is the discrepancy, because when the US president held up that placard, and also, you know, this was posted widely on social media handles, India's tariff was 26%. But what happened was that when the annexure came out on the official US website, India was, you know, getting a 27% tariff levy. And we did check this back with a lot of specific US government officials here in India and overseas as well. And it seemed to appear that 27%, the official number from the website, was the number. But now that US website has changed the number from 27% to 26%. So as they say, perhaps the president cannot be wrong. He said 26, so 26 it really is.
26 versus 27.
It doesn't really.
Yeah, it is what it is. What's really, spoken the street right now is the Nifty is on the verge of breaking that 23,000 mark as well. So that's the important number.
It has, in fact.
It's broken the
23,000
mark, I think, for the first time in the last 2 weeks or so after it conquered it. Let's speak about the impact of that on, could there be any sort of, problems coming in for a lot of these electronics makers? We have PG Electroplast joining in. Obviously, the thesis here for all these electronics makers is manufacturing in India for India, import substitution. So to that extent, not a lot of these players have any export sort of exposure. And add to that, the government recently approved the electronic component PLI of 23,000 crore rupees as well. Kotak in its recent note did say that this will aid backward integration. To what extent and what could the impact of the global noise be on businesses like PG Electroplast? We have Vikas Gupta, the managing director, joining in. Vikas, first up on the exports issue. I presume that you have zero exposure to exports, but in light of higher US tariffs, do you think the electronics industry in India could get impacted? That's point number one. And secondly, what kind of benefits do you expect from the cabinet approval of electronics component manufacturing scheme of close to 23,000 crores? How does that aid things for people like you?
So good morning, Manglu. Basically, when we look at the exports for our company particularly, right now our exports are almost negligible. And if we talk about particularly about the US market, our exports are actually nil. So we do not see any impact on our company for the tariffs that has been announced by President Trump. Regarding the overall industry, I think industry might gain in a longer run with these tariffs coming in, because the differential of the tariff between the Vietnamese and the Chinese origin goods vis-a-vis with the Indian origin goods is it's quite large. It provides an opportunity for arbitrage, but we have to see how it will play out, because everybody, all the governments will be trying to negotiate with the US government to look at the lower tariffs. So we don't know how it will play out. So we have to wait and see how it goes. Regarding the electronic component,
Mr. Gupta, we'll come to the PLI scheme in just a minute. I just have one or two additional questions to complete the export picture first. Understand that you don't have exposure, and I mean, I'm sure you're feeling very relieved in an environment like this. But otherwise, electronics exports is the big effort for India to sort of take it forward, particularly in products like mobile phones, right? Would you have a sense? I know it's a bit of an unfair question. It's a better question to be put to the industry association. But when we talk about the total electronics industry, would you have a sense of how much our exposure would be to the US right now? I mean, a lot of people are setting up big capacities. iPhones, for instance, I mean, from Foxconn to the Tatas, there's serious investment that's gone into it.
So, Surbhi, for me, I do not have the exact numbers, but largely what I can see, India is aspiring, and the players in the Indian electronic EMS space are aspiring to set up a large capacities and ramp up our exports, particularly for the mobile phones to the US markets. And it has actually happened in last 4 or 5 years. If you see the exports have grown multifold for the mobile phones from the Indian companies. So going forward, I think once the dust settles down on that this tariff issue, maybe I think still there will be advantage for Indian companies to look at.
Yeah, but right now we have to deal with this 26% additional tariff. The PLI scheme, now just to connect back to the other question, the PLI scheme that finally got announced, 25,000 crores, I think is the total value. Now that is entirely for domestic markets, or is there a sort of a portion of that also incentivizes making electronics for exports?
So, Surbhi, the broad draft of the policy and the articles that I have read, I've gone through. As per that, basically the focus for this electronic components manufacturing scheme is to deepen the component ecosystem in the country And there are key electronic components for which we are still dependent on overseas vendors. That is basically the idea from the government side to see how we can develop the component ecosystem for those key components in India. And I think the Indian companies will have to become the part of the global supply chains, global value chains to participate in those critical components.
And what does this do to players like you in particular? Are you having any backward integration plans right now for yourself? If yes, then, how does this scheme aid your margins?
So, Mangalam, right now, if you look at for our company, particularly the electronics is a very small part of our overall revenue business.
Right.
Regarding the backward integration, we are in talks for the component backward integration in our appliances category. Regarding the electronic components manufacturing scheme, definitely we are evaluating this and we are, in fact, we are actively will be pursuing the opportunities in this space also. And going forward, as and when the policy comes out, the detailed policy comes out, we might be participating in this policy as well.
What would your exposure to electronics be according to you? And with the backward integration that you're thinking for appliances, how much would that aid your margins by?
So regarding the electronics business right now, it is not even 10% for us in our overall revenue scheme. And we have aspirations and ambitions to grow that electronic business vertical as well. So we'll be pursuing the electronic components manufacturing scheme. Regarding our backward integration in our appliance category, we have already announced our intention to get into the air conditioning compressor manufacturing, and we are in active talks for that. So hopefully we'll be able to close that agreement within 3-4 weeks' time.
And how much money are you looking to put to work for both of these, for the component manufacturing, compressors specifically, which directly ties in with your business, gives you better backward integration? How much for that? And how much for this new electronics vertical?
So for the compressor manufacturing, we have already earmarked capex of almost around 350 crores. So that is already earmarked. Regarding the electronic component manufacturing scheme, so there are different components requiring the different amount of capex. So we have to evaluate, and it will be too early for me to commit on the capex amount in that scheme.
All right, and this 350 crore yields what kind of improvement in cost and margins?
So, Mangalam, if you look at the compressor plant that we are planning to put up, that will be largely margin accretive because almost 50% of that compressors we will be using for in-house consumption for making of air conditioners, and balance 50% will be sold to the outside customers. So if you look at the revenue side, we are looking at asset turns of almost around 4 to 5 in that with a capex of 350 crores. But out of that, almost 50% will be consumed in-house.
Okay, all right, got it. And the timeline for commissioning, I'm guessing it will take at least 2 years plus, right?
So, Surbhi, our target is that in the calendar year of 2026, maybe in the second half of 2026, we should be able to start the production on that.
Oh, okay. That would be fairly quick. Got that?
I just, since we have you with us in the interim, I would like to know your thoughts on demand for this summer, because I remember this very interesting conversation that we had with you and, Mr. Tyagarajan of Blue Star as well, saying that if AC demand grows beyond 25 to 30%, there could be a bit of a supply issue. Has that happened so far? We're just a couple of weeks away from summer, so I presume a lot of these orders for your clients would have been made already.
So, Mangalam, I would say still, we talked only maybe 2 weeks back. So still the market is hoping for a good summer. And I think if you look at the trend for last 15, 20 days, the heat wave has picked up across different parts of the country. And we are seeing a very robust demand. And we are keeping our fingers crossed. Let us see how it plays out. For us as a PG Electricals, let me clearly state here that we are adequately covered to take care of the demand for the months of April, May, and June. So for our side, there is no trouble. But definitely some industry players might face some kind of shortage of compressors if the demand picks up beyond the 20-25% target.
As of now, all signs are that it will be 20-25% itself, and perhaps not beyond that.
I'll say it's too early, but the sales are looking quite good. I would say it can be more than 20-25%.
All right. Got it, Mr. Gupta. We'll leave it on that note. Thank you very much for joining in. Appreciate your viewpoint. That's PG Electroclass. By the way, look at markets. It's serious pressure across Asia, and we've not been spared in the global storm either. The Nifty is down 275 points, but this is still the best-looking screen across Asia. Singapore, a market like Singapore now is down 3%. Japan is down almost 4%. South Korea is down about 2%. So all the markets from where we started at 8 a.m., they have doubled down, in terms of the decline. That's the extent of the fall after a serious drubbing yesterday as well. Tough Friday. Let's take a break. We'll come back on the other side and figure out how the commodity markets are coping with the Trump impact.
Welcome back. Let's shift focus to the commodity space. Manisha, what is it that you're tracking today? It's been a steep sell-off across the board overnight.
Yes, and the pain is that it doesn't stop there, does it? Because all the time zones yesterday saw very sharp declines, whether it was currencies, the dollar index, which has declined quite sharply as well, and all commodities trading at multi-week or multi-month lows there. But I'm keeping my focus on the crude oil prices because the declines here have been the sharpest. 6% of a decline in the overnight markets, and that has been the biggest single-day decline since July 2022. That's how bad that the crude markets have taken it. If you look at this week itself, we are down by 4.5%. And if you look at the prices in the last 1 month, they are down by 7%. And in the last 12 months, the crude oil prices have gone negative by 24%. So good for the consuming countries. Let me tell you that 80% of global countries actually import crude. For those countries, this price decline actually is quite positive there. Let's look at the reasons why we have seen such a sharp decline come in for the crude oil prices. Well, to begin with, the US has put tariffs of anywhere between 10 to 49% on trading partners. You know, that's the other thing about international commodities. These are global commodities in nature. And when you see specific countries putting tariffs there, it does disrupt the overall international market there. And that's exactly what is happening with the crude prices also. Apart from that, there also are concerns that these tariffs could lead to weak global economic growth going forward. And that would mean weaker crude demand going forward as well in sense of fuel. In any case, with the kind of renewables investment and energy transition that we have been seeing, we have seen some pressure come in for crude, but this just adds more to that. Apart from that, the U.S. crude inventory is also gained up by 6.2 million barrels versus a forecast of a decline of 2 million barrels. So this was a big surprise coming in for the markets. And then it also has been about the OPEC and allies meeting, which was yesterday. They also have speeded up the output hike going forward for the month of May there. If you look at the numbers, well, the street was working with a number of 140,000 barrels per day of an increase. What OPEC and allies gave you was 411,000 barrels per day. So this is 3 times more than what the street was anticipating. So when you look at OPEC and allies, there are 8 countries who actually have agreed to that. And these are inclusive of Russia, Saudi Arabia, UAE, Kuwait, etc. What the markets are also looking forward to now is the OPEC and allies meeting. The next one happens on the 5th of May. That would tell you on what is anticipated for the month of June. But very closely for today, it is going to be the US non-farm payroll data. Well, the further cues would come in from that.
Okay, all right, Manisha, got it. Thank you very much for that. And with that, we have to take a very quick break, come back on the other side, and it'll be time for a special segment. It'll be the Citizens Monetary Policy Committee. Lata will be in conversation with experts to discuss whether the RBI will cut repo rates and boost liquidity in the monetary policy. That's all set for next week.
The tariff drama is done. The next big event in the economic calendar is the Reserve Bank's Monetary Policy Committee meeting on April 9th. Trump's tariffs seriously threaten growth, so should the RBI MPC be ultra dovish? As always, the Citizens Monetary Policy Committee of CNBC-TV18 meets to discuss the issues that lie before the RBI MPC and what they ought to do on April 9th. I have with me Chairman of our committee, Dr. Pranab Sen, and members Shaumyakanti Ghosh of SBI, Sajid Chinoy, JP Morgan, Samiran Chakrabarti of Citi, and Sonal Verma of Nomura. Gentlemen and Sonal, thank you very much indeed for your time. The first question has to be the global setup. So, Sajid, let me start that with you. How does the global economy look post this massive tariff imposition? Are you seriously cutting global GDP estimates?
Lata, we're doing more than that, because I think you have to, what we've seen this week is a seismic event. And I think this needs to be viewed at three different levels. The first level is to understand that Asia has been particularly badly hit. This is no surprise. I think the tariff approach was a very mercantilist approach. If you look at where the US runs the 15 largest bilateral trade deficits, 10 of those 15 countries are in Asia. And therefore Asia, whether it was China, Vietnam, Japan, India, other countries were hit with very large tariffs. So this is going to hurt Asia directly, because now an export-led model that many Asian economies have with a lot of exposure to the US will come under threat. You've got large exports to GDP to the US and a large increase in tariffs. That's the first level. But there's a more important level here that affects the global economy. What this tariff increase does over the last few months is effectively increase US import tariffs by 20 percentage points. US tariffs are now the highest in over 100 years if these tariffs sustain. And this constitutes the largest tax increase on US households since 1968, when the US Revenue Act came into being, right? So the sense is that a very large tax increase is inevitably going to throw the US economy, and with it, the global economy, into recession later this year. And I think that's the big change from this week, that we now have greater concerns that the US and global economy will spill over into recession later this year. So economies now have to worry about both hits. A, your tariffs go up and that hurts your exports, but B, global demand is going to be much, much weaker later here because you're in a global recession. And number three, and we don't have time for that today, there's a much larger structural question. Is this the beginning of the end of the, 80 years of deglobalization that we've seen since the Second World War? And what does that mean for growth, for inflation, for productivity around the world? But those are more weighty questions that will unfold, in the months to come.
Yeah, no, that's a debate for another day. But for the moment, the MPC is going to be faced with an extremely difficult global environment. Samiran, we were already worrying about our own growth. This is an added headwind. Do you think there is space for extra dovishness, or even requirement for extra dovishness because of the global story?
Thanks, Lata. I think the way MPC will probably look at it is that from a risk minimization perspective, now the downside risks to growth are much higher than the upside risks to inflation. That clearly opens up space for more easing. Our baseline is that we should see a 25 basis point of rate cut in this policy, along with a change in stance. The RBI has already provided significant amount of liquidity to the system for better transmission of this rate cut. And that assurance would also come in the April policy. Additionally, we have added an rate cut in the August policy also in response to this downside risk to growth. So that way we now have another 75 basis point of more rate cut in this cycle. But we have also very clearly mentioned that we are entering a period where it is possible to imagine that the policy rates could stay below the neutral rate also, because this 75 basis point rate cuts will only take us close to a neutral rate of about 5.5%. So given our estimate that inflation is running close to 4%, but there is a possibility that we might want to go below neutral also. But like it's a very, the world is in a state of flux. So I don't think policymakers will be very proactive always in this. Maybe to some extent, they will wait for how these things unfold before taking that final call on whether to go below the neutral also or not.
Okay. When we ask for your votes, let me see how many of them agree with you in terms of 3 more cuts or 4 more cuts. But let me first get the GDP numbers. That's also a forecast we will look for. Sonal, that question to you: will India's GDP growth number come under pressure? The Reserve Bank's current forecast or February forecast for FY26 was 6.7. Will they have to lower it?
Yes, we do think there's downside risk to the RBI's projection of 6.7%. Now, the direct impact on India because of US exposure is actually not that high. India's exports to US are about 2.1% of India's GDP. So the impact is manageable. But I think the indirect and sort of the second round effects are what could be more material because it's broadly a universal tariff that has been imposed, so global trade numbers are likely to get downgraded. Uncertainty is weighing on business investments, and tighter financial conditions will also feed back into weakness in private investments going forward. So we do think that the growth numbers starting April, which will reflect the real underlying export growth as compared to the last 3 to 4 months, where there was front loading ahead of anticipated tariffs, are likely to be materially weaker. Our own growth projections for India are at 6% for FY26, and we do think the 6.7 of the RBI is on the higher side.
Okay, 6%. I think that's not a number I heard from many people. I heard 6.1 to 6.3. But then the MPC has to concentrate on inflation. Soumya, that to you. Will India's inflation pan out as 4.2%, or can it be even lower?
Yeah, thank you, Lata. No, I think amidst this global turmoil, uncertainty, and a complete flush with the system has been thrown in since yesterday, I believe the good news is on the inflation front. The numbers for inflation are actually looking significantly better now. And if the current estimates holds, I think for most of the months in the current fiscal, I think till October or so, the numbers will stay closer to 4% or even lower than 4% on many of the occasions. So that means actually that the RBI target of 4.2%, in fact, for the last fiscal which has went by, the RBI projections will also be was higher, and this time also the RBI target of 4.2% inflation is likely to be undershot. So from that point of view, inflation as of now doesn't look a big issue. And there are 2 more factors which actually are downside risks to growth, which could also add to a comforting factor on inflation. One is the point that because of the global uncertainty on tariffs, there could be a price decline in some of the sectors which are more integrally linked. So that could also have a sobering impact on the inflation. And given the numbers and given the fact that the growth continues to be a little bit weak, so that will also give a comforting factor in terms of a manageable core inflation. So if I take all these factors into account, the inflation numbers are going to surprise on the downside, at least for now, for next several months in this fiscal.
Okay, point taken. Huge disinflation. You can't sell to the US, so you sell it more cheaply to the rest of the world. That big disinflation we will have to countenance. But Dr. Sen, let me turn the question on its head. Samiran is going to the extent of, even we have to go below the neutral rate. What about savings, sir? We are at kind of a 5-year or what? Some people say even 40-year low in terms of household savings. Can we go no holds barred on cutting and dovishness?
Yes, in a sense, we can, and we will probably need to do that. So here I agree with Shomiran. We may actually need to go below. But this is not the time to do it. I mean, one has to think this through a little bit. You have to see what strategies different countries around the world are going to adopt, because there's going to be a wholesale change among almost all countries of the world in terms of the way they are going to plan their reaction to what has transpired. So yes, I think we should be prepared for lowering everything. Inflation, I completely agree, that inflation is likely to come down sharply. And this is not just about what's happening globally. It's also that if you really look around the world, the only country that really stands out as being able to grow on its own steam is India.
Yeah.
And so, when somebody talked about, I think, mentioned that the growth would be probably sub 6%, I think that's not a bad number, by the way, because other countries are looking at facing recessions. Yes. And I think we would be around the 6% mark purely on the basis of our own strengths. The point is, we shouldn't rush into anything until we see how things are evolving in the rest of the world.
All right. Fair point, sir.
Premature steps is, I think, a bad idea.
Okay. Rushing into